Hello everyone! Trading is always a risk, and the strategy that I'm going to show you today is doubly or even triply risky depending on how you play it. So I don't recommend this for complete beginners, but it's still good to know about this option. Many of you write to me that you're struggling with expiration times, and that's true, they aren't always easy to calculate. But this tool can be beneficial if used wisely. But enough teasing, and let's get into the video. So I opened a trade betting on a decrease with unusual expiration time of 3 minutes for me. Let's explore why I made this decision. On one hand, we see the green MACD line crossing the red signal line from below upwards. That's usually a signal to buy. But we also see low market volatility as shown by the same indicator's bars. That means there is a clear sideways movement happening. Let's draw its upper boundary here. The lower boundary aligns with the lower Keltner channel boundary. So I'm betting that the price will drop from the lower boundary back into the price corridor, as there isn't enough momentum to break through the level yet. I've set the expiration time to 3 minutes. Now let's see how it unfolds. And folks, it looks like an epic fail. What to do in this situation? Definitely not one thing. Don't panic and freak out, okay? In trading, there are never guarantees, but there are ways to fix this. We can either minimize the losses or even come out with a profit. So like I said, the main thing now is not to panic, yeah? So I would advise beginners to just close the trading platform and relax. And think about where the mistake was and how to avoid it next time. For instance, we could have avoided taking excessive risks and waited for a full alignment with the trading system signals and not go against the MACD. But let's go back to the chart. Obviously, after such a spike, a correction must follow. We just need to find the right level, like here, for example. We see the price has reached a resistance level where it should start to correct. At this point, I doubled the position. What do we have in the end? I now effectively have 3 trades that will close at the same time. Let's draw again. Here is the resistance level, where the probability of a bounce back is quite high after such a rise. So I doubled down on the investments from this point to cover the minus from my initial entry. But folks, you can only do this if you are confident in your decision, okay? Otherwise, these trades will also result in a loss. It's likely that a new storm just swept through, sending stock prices soaring, and it was hard to predict. But we see the price is rapidly pulling back, and there's even a chance everything will return to the initial state. Look at the balance, friends. We made a profit of $576 instead of losing $150. It seemed hopeless in the beginning, didn't it? Risk is an inherent part of trading. Even in the safest type of trading, where you just buy assets hoping that they will increase in value, there's always a risk that the prices will plummet and you will lose. Not everything, of course, but a significant amount of money. But here, like in poker, no risk, no reward. However, you can risk differently, recklessly, and then you will lose. Or it can be controlled risk. This is when you understand the acceptable margins of drawdown, but know how to make up for it and earn eventually. Want to learn this? Then subscribe to my Telegram channel and join my deposit boosting marathons, which I conduct weekly in my private club. There, I post my signals, and my participants usually generate from $150 to $5,000 on average. And what, do you trade without losses, you might ask? No, of course not. There's always a risk. But when it's controlled, the success rate of the trades is higher, and that's the whole secret. You can find reviews from my partners in my Telegram channel, and I have left the link for you in the description below this video. so subscribe to my channel before you forget. And now let's get back into the video. Friends, I covered the loss and made money using the double up function. Now you might be asking yourself a logical question. Guess what it is? What stopped us from covering the loss in another way? Technically, I could have simply opened a new trade from the same level, and even two, to cover the loss. Right, but then I probably have to reduce the expiration time as I was counting on a rebound. And assuming it would last long would be a mistake. Because in this particular situation, I don't see 100% confirmation that the market has indeed reversed. And that's why the double up function allows me to significantly reduce the time for manipulations. I'm generally not a fan of frequently changing settings or jumping from one expiration to another during trading, because that's extra noise which disrupts focus and distracts from actual trading. And in trading, psychology and mindset are more important than any signals. I often talk about this on my channel. I've made many videos dedicated to trader psychology. If you haven't seen them yet, please check them out. It's really the most important information that you should absorb first and foremost. But let's get back to trading and continue testing the double up function, alright? I think there will be a suitable moment soon for a put option. I will wait a little bit longer. And yes, now is the perfect time. Open a trade for a decrease. First, let's break down why I did this. Here, we saw a strong rise followed by a corrective decrease in price. We can already see that the MACD is close to having the green line cross the red line from top to bottom. I think the chart will return to the Keltner channel range, at least to its middle line or even slightly lower. I assume that the news that caused the chart to jump up has ended and it will return to sideways movement. This time, let's set broader boundaries for it, okay? Like this. In this corridor, I expect the return of the euro and dollar exchange pairs value. And let's observe. If the chart now bounces higher than the point where I opened the trade, we might do another double up, but under one very important condition. If you are confident in your forecast. I'm still confident as the MACD lines are crossing very convincingly and the market situation is leaning towards a decrease. So I'm doubling my position now. Here's to being overconfident. The chart just soared again and that ironclad MACD line crossing never happened. I will refrain from hasty actions now. The main thing here is not to turn trading into a casino, where the desire to recover losses prevails over reason. The situation is complex right now. It could be the end of the correction, and then the chart could break through the upper level, or it could be the realization of my forecast for a further decrease. And in the first case, it would make sense to open a trade for an increase after breaking through the level and increase the investment size to cover losses. In the second case, use double up when the chart goes higher and you're sure that these are just temporary fluctuations. But right now, it's not clear to me which way the chart will swing. Will it go higher or will it meet my expectations? Therefore, I will not take any actions. The double up function can be likened to averaging a position if compared with the classic stock market, for example. This is when you expect growth and buy an asset, but it slightly decreases in the short term. But you buy again at a now lower price, thereby reducing its average cost and increasing your profit when your forecast comes true and there is growth. Very similar, because in such a situation you also must be sure of your actions and calculations. Otherwise, you will increase not your profit but your losses, which is what happened to me just now. The trade closed and I made $576 instead of potentially receiving half as much. Friends, one rule is important in such a strategy. Pay attention to the chart, alright? Our first trade was opened at this mark. Then, if we see that the chart temporarily goes against the forecast, but we are confident in our decision, we can use double up at a mark just above the entry point. And then we watch. Different scenarios are possible. For example, if the price stabilizes at this point, we would have compensated for our losses. But if the chart drops below the entry point, then our income doubles. As you just saw in practice, in this case, the risk is high, but it can be justified. But I definitely don't recommend playing roulette and betting on red or green, alright? For instance, doing a double up at a point that is below the entry point. Don't try to hit the jackpot when you are already in profit, okay? So let's put a pin in it so you understand clearly. The risk that the chart might pull back from this mark is never excluded, and then you would need to compensate for a double loss, and thus double the risk of the trade. Okay, we've sorted that out. Let's move on, and I'll look for a new trading opportunity. I'll open a put option on the exchange currency pair of the American and Canadian dollars. Earlier, there was a drop in the chart and a serious price collapse, and then a reversal, and the price quote stabilized in a sideways movement. Let's draw it and get such a broad range of the price corridor. The volatility is not very high right now, so despite the crossing of the MACD lines, I think that if there will be growth, it will be later. So I took a risk and opened a trade for a decrease, betting on a rebound from the resistance level in the sideways movement. Now let's observe and see if we can apply the double up function and in what situation. Today I specifically chose not the most straightforward situations to account for the possibility of unexpected jumps, but I do not recommend and even forbid you approaching trading this way, okay? Right now, for example, there is a chance of a rebound from the middle line of the Keltner channel, as even the channel lines hint at a potential reversal. Then we'll see if it's necessary to double the trade. But as mentioned before, as long as the trade is going according to plan, I will not increase my investments. The chart is not a horse, and I can't spur it to fall faster by pressing the double up button, alright? So let's skip the betting. This is what I was talking about actually. This is exactly the kind of situation where greed could have led to bigger losses, okay? The chart has almost returned to the resistance level and the opening of the trade. If it goes significantly higher, we could look for an opportunity to cover the loss. But pay attention, friends. The double up function won't be available throughout the entire expiration period. It closes very soon. For a 3-minute expiration, it turns off 1 minute before the trade ends. There, it's gone. So we just wait for the trade to close. That means you can't cheat to significantly increase investments at the very end of expiration, if the direction of the chart movement becomes clear, all right? Each expiration period has its own interval when double up closes. For example, with 30 seconds, the button disappears 5 seconds before the deal concludes. And you can experiment with this function on a demo account to find out these intervals. And in general, before applying anything in real trading, always test it on a demo account, okay? And in real trading, always remember this limitation and think twice about whether to use this function. But as a tool that can solve a problem with incorrectly calculated expiration in a specific situation, why not, you know? In this particular trade, I didn't have to use it. $133 just came into my deposit. Let's continue to observe this pair. I think growth will start soon, and we will try to find a suitable entry point for a good position. Now I will open a trade for an increase. We are close to takeoff, and the Keltner channel's middle line is a very good base to bounce from. Clearly, the middle line of the channel is now a support line for the upward trend. There was a rebound from it a few minutes ago, so we can assume it will happen again. And while the upward trend moves within this corridor, I got the entry point from the Keltner's channel's middle line. But friends, we see that the green MACD line may cross the red from top to bottom. And though they've already repelled each other before, and maybe the price will stabilize in a sideways movement due to the currently low volatility. It's all very, very ambiguous, and this situation is just what we need to identify opportunities to use the double up function. Well then, the rebound has happened, now let's watch. Meanwhile, I'll share another way to use the double up function. It can act as a risk hedging tool in a trade. Suppose you're waiting for a level breakthrough, but you're not 100% sure, yeah? Then you can open two trades in opposite directions. As the contract ends, when you see that the movement starts to break through or conversely rebounds from the level, you can double the trade that will bring profit. Then you will cover the loss and even make a profit. And even if no focused movement starts in either direction, you can just sit back and do nothing at all right? With a payout on the option, say 90%, if one closes at a loss and the other in profit, you only lose 10% of the investment, which is not too much. Friends, I'm opening another trade, this time for a decrease in the price quotes. Yes, you heard right, now I have two trades going in opposite directions. Keep an eye on the chart, please, I will explain. We had a crazy rise, alright? The price sharply soared and reached a resistance level, so after such active growth within a single candle, a correction from the level is typically inevitable. And the previous candle forms the evening star candlestick pattern, which is also a signal for a market reversal. Yeah, this is not a guarantee, and it may be that the chart will shoot higher since there are resistance levels above the point where I opened the trade. But then I will use double up to compensate for possible losses. The first trade for an increase is almost completed. There can be no questions about it. Yes, friends, there is a profit of $133. Let's watch the second one. While we wait, I'll continue talking about the hedging idea. It's not exactly correct to call it that, but the essence is close to the meaning of the word, basically. By the way, are you familiar with this term? On the stock exchange, to hedge, trades with opposite movement are opened, but derivatives are used for this. For example, you bought stocks and are waiting for growth, but to compensate for a possible fall, you enter into a futures contract on the same stocks, but with an obligation to perform a transaction with the stocks in the future at a set price. And then, if the stock price unexpectedly drops, you earn on the futures. Here it's something similar in essence. But friends, let's take a break and return to trading, alright? There's 1 minute left until the trade ends, which means we can no longer use double up. While we wait, it's the perfect time to draw and explain more about what I was talking about when I opened the trade at this resistance level. So the chart rebounded from it. Theoretically, it could have risen to a level slightly higher. In principle, any level is not a flat line, but a zone with a certain range. This is how it looks. And the chart can indeed enter this zone for some time before making a reversal. But if you are confident in your analysis, you could have used double up at the upper boundary of this range, okay? However, I did not need to do that in this case. So we just have to wait for the trade to finish and collect the profit. I think that will happen. Since there are less than 10 seconds left until the trade finishes, and there are no signs of a sharp spike up. Yes, friends. We're looking at another profit in this balance, And I think we can end the trading session on that note. Wait, no, hold on. Something interesting is happening. The chart has sharply risen to the same resistance level that I mentioned earlier. In such a situation, you can make money on divergence by opening a trade for a decrease, or conversely, if the level is breached, you can profit from the rise. But no, the price continued to fall, so we won't stretch the video and open a dubious trade. Or will we? Doubts are tormenting me, but I still can't pass up such a situation. So I guess I'll open another trade for a decrease. I'm waiting for a repeat rebound from the resistance level because the MACD lines are crossing from top to bottom. And that's a signal that the market will go down. At least it looks logical. Let's watch. Although the market itself, it seems, doesn't quite agree with me. Let's double the investment to cover the loss. Now the chart has reached the upper boundary of the zone I drew earlier. I don't think the price will go higher, but in this corridor it might stabilize for some time. And even if the expiration isn't enough, doubling will cover the loss of the first trade. The chart is really volatile right now. What's going on? All resistance levels are breached and the MACD lines, which we're about to cross, are bouncing off of each other. I should have ended when I planned to, but now it's not the time to panic. The most foolish thing to do in such situation is to try doubling the trade haphazardly and lose even more if you don't understand what to do. But I have a plan, so I'm using double up at the current mark. The price pulled back and returned. Great, let's double again to cover both the losing trades I opened below. Now let's wait for the correction to start from the resistance level. Later I will draw this level and explain what I did, okay? But for now though, we need to keep our finger on the pulse, ready to open another trade if necessary. By the way, friends, if you trade OTC pairs, double up is available almost all the time of expirations. For non-exchange assets, access to this function closes 5 seconds before the trade closes. So on OTC pairs, there are more opportunities to profit from double up. But I repeat, don't abuse this feature, okay? To avoid turning trading into a slot machine game. Okay, excellent. The chart pulled back. Now I can explain why I doubled up at this point. It's simple, friends. Listen. The price sharply rose to another resistance level, which was easy and quick to spot on the chart. And I opened 2 trades from it, which should cover the loss of the trades that are lower. There was enough expiration time left for the chart to bounce off the level and go in the direction that I needed. And a great visual example of how double up can save you when unexpected spikes knock your position out. And by the way, the chart has almost returned to my first entry point, and there's even a chance to profit from the trade. Yes, friends, I even ended up in profit. Excellent result. But we will definitely end it here and move on to withdrawing funds. And let's withdraw the earned money. It took some effort to get them in my balance today. I will withdraw 2,000 to my cryptocurrency wallet. I'm withdrawing with the stablecoin USDT. This currency is tied to the USD rate and can be used anywhere in the world, just like regular paper dollars. If you wish, you can also withdraw money in other popular cryptocurrencies, but due to the volatility of the exchange rates during withdrawal, this is not always convenient. All gone, here's a short message from the broker that they will have taken my request into work and will soon carry it out. Withdrawals up to $10,000 happen very quickly. While the request is being processed, let's wait, and then I will come back and show what a fully completed operation looks like. So my request has been processed and the funds have reached my wallet. The withdrawal took 17 minutes. The status of the transaction changed to completed, which is nice. And that's all for today. Technical operations are completed, so let's sum up. Friends, the double up feature was just recently added to Pocket option. Don't flirt with it, okay? There are a lot of risks involved with using it, so I repeat the age-old truth. Test 7 times, press just once. But as an additional tool in your arsenal, it can be quite handy. Today I showed you the ways to use it when it's needed. If you have already used this option, write in the comments when you used it, did it work, and how much you've managed to earn with it. If you have found this video helpful, please give it a like and subscribe to my channel. Also, don't forget to click the bell icon so you don't miss out on any of my new reviews where I explain different strategies. And that's it for today. I'm very glad to have seen you today. I'll see you on the next one, and bye bye.